Hey everyone, in this video I'm going to tell you how you can reduce your tax burden and use your 529 plans to pay off a portion of your student loan debt. Now before we get any further, let's talk about a few caveats here. It has only recently been made law that you can even use funds from a 529 account to pay for student loans. Prior to this, that was not considered a qualified distribution. Now I don't want to go too much into exactly what a 529 plan is, but I think I am going to have to cover a little bit of background on them because a large portion of people don't know what they are. So let's set a little bit of foundation here. So a 529 plan is essentially an investment account that's used to save money for college. However, it can be used for trade school. It can also be used for K through 12 and private schools, which is also a new law. Essentially, you invest money each month and you can put it in multiple types of funds. It's very similar to a Roth IRA, but for education. The reason it's similar to a Roth IRA is because this money is post-tax, and once you put it in the account, it then grows tax-free. And it will not be taxed as long as you withdraw the money for a qualified distribution, right? And I've already mentioned some qualified distributions, such as K through 12 education, trade school, private school, tuition at a college or university, fees at a college or university, and room and board. Now, as I mentioned before, student loans were previously not on that list, but they recently have been added. More specifically, it's a certain amount. So you are allowed to use $10,000 to pay off student loans from a 529. Now that's not per year, that's per lifetime, okay? So if I'm the beneficiary, but I also have student loans, I can only use $10,000 from my 529 account to pay off my student loan debt. After that, I can no longer use it. I can, however, continue to use my 529 to pay off student loan debt for my siblings. Again, up to $10,000 per each. But we're focused on our own student loan debt here, okay? So keep that number in mind. $10,000 from my 529 is what I'm allowed to use. Now, one of the other benefits of a 529, aside from your earnings growing tax-free, is the fact that many 529 accounts give you some sort of tax advantage in the state that you live and work in. For an example, if we look at New Jersey's 529 account, right? Each state tends to have their own. Each state is different, but New Jersey's will allow you to deduct up to $10,000 per year from your state taxable income, which means when I go to file my taxes at the end of the year, if I have put at least $10,000 into my 529 account, my taxable income has been reduced by $10,000, but only for New Jersey state tax purposes. There is no benefit to your federal tax by using a 529 account, okay? Some other things, each state might also offer other incentives. Again, the state of New Jersey. If you make under a certain amount of money, they will give you a matching grant. So your first $750 that you put in, they will also put in $750, right? It will also make you eligible for certain scholarships. Now, a lot of this is income-based. Again, in New Jersey, let's say I mentioned that you can deduct up to $10,000 that you put in each year, but that's only if you make less than $200,000. However, I don't think that's a problem. Most of the United States does not make $200,000. So I think we're safe, all right? But where this really becomes handy is when you live in one of these states that will allow you to make a deduction. Another state is the state of Iowa. Iowa will allow you to deduct up to $3,522 per beneficiary. So if you have two children and you decide to put that money into both of their accounts, then you can deduct over $7,000 from your state income taxes, correct? But again, here we're not talking about our children, we're talking about how we can use this, all right? So a way that we can leverage this, if we already have student loan debt and we want to pay it off is if we do have a 529 account, we can take money from that and put it towards the student loans. That's fantastic, but we're going to try to take advantage of this assuming that we did not have a 529 account when going through college. So what you can do is you can actually go and open a 529 account in the state in which you reside and which you work, and you can open one right now where you are both the owner and the beneficiary. And this is great because we can put money into that account right now, still get the state tax benefits, and take $10,000 of that and use it to pay off our student loans, which is awesome because this gives us a discount on our student loans, right? In New Jersey, it would give me a discount. I would get a $10,000 tax deduction, right? And if I were in Iowa, I could get a deduction. If I'm the only beneficiary and I'm putting it in, I would only get $3,522, but I could split that over 2 years, correct? Or 3. So why is this really important? Well, it's always great to save money on taxes, but the real reason it's important is because your federal tax deduction from paying student loan interest only goes up to a certain income threshold. If I remember correctly, it's $85,000. So once your gross income is $85,000 or higher, you can no longer write off your student loan interest on your federal taxes. So you essentially get no tax breaks whatsoever. And there is a small threshold. Once you start making above a certain amount of money, you're in this weird area where you're not exactly wealthy, but you get 0 tax breaks whatsoever. And you're starting to approach that range when you hit about 85,000, right? So this is a great way to take advantage. What I would suggest is look up the 529 account in your state. Just type it into Google, say 529 account, enter whatever your state is, and it should pop up. It's usually run by your state's treasury. Now, I did mention that every state is different, and it's sometimes much more different than what I said the difference was between Iowa and New Jersey, right? These both offer state tax deductions. However, if you live in a state like Texas, Texas does not have state income tax. And because they do not have state income tax, you obviously cannot write off any contributions you make from your state tax. And actually, if you Google Texas's 529 account, there's absolutely no tax advantage to you using this method. In fact, the only advantage that you get is the fact that you can put the money in and it grows tax-free. So I don't suggest using this in a state like that where you get no tax advantage. But as a benefit here, if you do open up a 529 for yourself, whether it's in a state where you get these advantages or not, once you use that $10,000 to pay $10,000 of your student loans, you can either close that account or you can leave it open and continue to contribute to it. This is especially useful if you have children and you want to start saving for their college, or if you do want to continue your own education, because you can change the beneficiary on your account. You can leave it as yourself if you wish to go to school again someday, or you can change it to your children, name one of your children, and start to contribute to it and get those tax breaks. Perhaps you can, even if you don't have children, but you are planning to have children, you can leave it in your name and continue to make contributions, or you can do it for any family member, all right? So guys, I hope this helps. I hope you enjoyed watching this video. Google 529 accounts and use this tip to help save you money on your taxes and to pay off your student loans at the same time. Thanks for watching. I hope you enjoyed the content.